Hello and good morning, folks. Welcome back to Almus Market Mornings, your daily dose of global financial update with me, Shikhar Garg. And it was the softer US CPI which started a stir in the markets last week. And likewise, we had our Indian CPI released yesterday. Now, Indian CPI softened as well to 6.77% in October against the 7.4% in September. Reports suggesting that a drop in food prices were one of the leading reasons for this softening. Now, although the central bank would be fairly aware of the upcoming data point, but this might yet bring in some sort of reduced hawkishness or release. I hope I'm speaking in the right direction. But on the other hand, Japan's economy shrank for the first time during the year in third quarter, substantiating the gloom on the macro front as everyone's been talking about. Are you expecting something similar, JK? What's your take?
Yeah, good morning. Yes, I think a lot of information and data on inflation is in the focus. After last week's US CPI, we had WPI and CPI of India published yesterday, printing 8.39 for WPI and 6.77 for CPI. They were quite below expectations. Then the CPI number, which even at 6.77, is recording 10th month of higher than 6%, which is the upper limit of the band permitted to MPC to manage the inflation. So if you look at it, both US and India are in the same position. While CPI last month in US was much lower, they still are looking to raise rates 0.5% in December because the absolute rate of inflation is still high and the terminal rate is still more than 1% higher. And similar is the case in India that, well above 6% in CPI, notwithstanding the recent fall, is giving no room for RBI to be complacent, and they will be raising rates by at least 35 basis points in the upcoming meeting. So we are still in the rate hike scenario. Of course, in US, we will be looking at the PPI, which will be published today for more confirmation on whether the inflation is really easing. And yesterday we had some contrarian indication when the New York Fed inflation expectations were published, and it was more than expected. Yes, for the markets, it was the day of consolidation yesterday after the big moves post CPI. Stocks were slightly down. I would put it down to profit taking and perhaps reacting to not such a good news of Amazon also planning to cut as much as 10,000 jobs in the coming days. Really, as the Fed has been saying, the lag effect of the higher interest rates is starting to impact the companies, and that is what will be in the focus in the coming days also. Also, the yields saw massive drop was seen last week, and there was some selling, perhaps as a profit taking by investors as well. Chinese markets were definitely in focus after the slew of measures supporting the property sector, as well as the 20-point program of relaxing the COVID norms announced by the Chinese, which has given some optimism to the Chinese market in particular and the global markets in general, because the Chinese demand is likely to increase the global economic activity. But more focus was on Xi and President Biden meeting. It was considered as a baby step, and possibly, though there was nothing fruitful which has come out, although references were made to the Ukraine war, China expressing opposition to any sort of nuclear usage in the wars, and then the Taiwan Strait. These were the main focus. But what is considered as positive is that their personal meeting is ensuring that at least there is no further deterioration in the relations between the two countries, which has been haunting the global scenario for very long. We had a lot of officials speak yesterday. the Mr. Hunt, UK Finance Minister, who is going to present the budget on November 17th, that is this Thursday, is indicated everyone to be prepared for higher taxation rates. So it's given that everyone has to undergo some pain for gain in the long term. UK economy definitely after this is going to be under a long-run recession, as well as the Eurozone economy, because the cost of living is higher, interest rates are higher, and there's going to be higher taxation as well. It's in fact a bit surprising that UK pound held near 1.18 despite the prospects of long-run recession, possibly taking support from slightly weaker dollar. In Eurozone also, industrial production came both month on month and year on year came better than expected. But again, this is put down to some improvements in the supply chains. At the same time, higher inventories there are indicating that going forward, the industrial production may not print such a positive feature. And the Fed speakers were very much on the line, Valor and Brainerd. All of them, basic line was that Fed is not done with the interest rate hikes, but Valor was saying that it is long way to go as far as the final rate is concerned. There is also concern expressed about the challenges of the lag effect of which is uncertain, and then also the global economic challenges because of the Fed policies. On the cryptos, of course, the miseries have not ended, and for a segment which was considered to be a completely decentralized and very safe setup, now it is facing huge challenges with crisis shifting from one platform to another, and we have seen the leading cryptocurrency, the Bitcoin dropping below 16,000 after 2 years, and this is the low of last 2 years. Currencies again consolidated. Euro tested the high of 1.0360, and it's a very significant level because in the last few years, dating back even before COVID, that is the level which was forming a bottom for the dollar, for the euro, from several highs seen, and this level was broken in the wake of higher US rates and also the European gas issues and the Ukraine war. And I think it takes a lot to overcome this level. So I think these levels will offer very good resistance for the euro, and even dollar yen. Surprisingly, Kuroda made a statement that market is he is pleased to see the market responding to the efforts of Japanese authorities to rein in the dollar. So as soon as he made the statement, in a few hours, USD JPY was up from around 139 to closer to 141. So basically, dollars losses have been pared somewhat because of profit taking being at high resistance levels, as well as some uncertainty whether the CPI print was one-off or whether we are going to have more consolidation. Same was the case with the USD INR as well. After dropping nearly 3% from the highs of 83.25 to 80.30 in the offshore markets, it was the turn of the importers to jump in and take advantage of the huge drop. Psychologically, 80, very few in the market expect it to break, without some good news from the domestic fundamentals. So we saw massive buying, but I think very few were prepared for the kind of up move, like almost 1% from 80.55 to 81.30, and it was a combination of big buying from foreign banks, and then later on reportedly some defense-related buying, etc. Technical level of 81.30 did hold, also because intraday we had already seen big moves, but probably the correction is not yet over because the dollar index itself is looking to retrace some of its losses. Thank you.
Okay, JK, quite good. And yes, as JK mentioned, folks, be prepared for what's going to come in the markets, as there's a lot of uncertainty. Though, as we spoke, that the CPI numbers released were softer than what it was in the past 3 4 months, but it still continues to be that we have the 10 months of high inflation, and that's why there's, as JK mentioned, no room for complacency, and we can expect a 35 basis point hike in the next round of MPC. On the other hand, we can also see a lot of lag effect coming in from the high borrowing cost that we have been having with the hiking rates, and the impact is seen in the way of layoffs coming and being a trend altogether. On the other hand, the cryptos still having the wrath of the FTX saga going on, while as for the currencies, we saw yesterday that there was some bit of profit taking going on with the kind of trends in the markets. But all the more reason for us to see where the currencies are headed, as there are both set of players ready to latch onto the price action, just like the buyers did yesterday on USD INR around 80.55. That's it for today, folks. We shall come back again tomorrow with another round of updates. Till then, thank you so much for listening.